Meantime, another high-profile tech company was out talking late today. Facebook CEO Mark Zuckerberg made his first public appearance since his company sold stock to the public back in May. Shares of Facebook trade at about half their price since they went public. They were $38 a share that first trading day. Tonight, closing below $19.50 after a 3.3% gain today. Now, this afternoon, Zuckerberg said the long term for his company rests with its mobile strategy, and he doesn't mind being underestimated.
I would rather be in this cycle where people underestimate us because I just personally would rather be underestimated. I think it gives us good latitude to go out and take some big bets and do some things that really excite and amaze people.
Max Wolff is a senior analyst and chief economist at Greencrest Capital, joining us tonight from the NASDAQ. So, Max, how about it? Do you think the market's underestimating Facebook?
Well, I certainly hope so, especially for those people who bought it around $38. I know that they think so too. It's a little bit disheartening to see a little bit of a lesser focus on the investor community. On the other hand, I think it was good to see Zuckerberg go out there, be honest, address some of the shortfalls, the quote-unquote disappointment around the IPO, which I know with a $50 billion market loss is fairly widely felt, and to begin the process, hopefully, of rebuilding faith and rebuilding communication, really, between the general public, particularly the investing public, and this company's C-suite executive group.
So, Max, let's talk about Apple and Facebook as a pair here, because these two tech companies certainly are high profile, but very different trajectories for their stocks. Apple close to all-time highs, Facebook half the price when it went public. Are their business outlooks that different?
Yeah, I mean, they're kind of in a different place. So Apple's defined the sort of beat the high expectations game. We expect them to do very well on the iPhone 5 tomorrow. Just think of how much we're talking about in advance. This has always been an area of particular strength for Apple.
Sure.
They've always been much, much beloved and widely followed. They have begun to tie up a little bit with Facebook. And one thing they do share in common is they both really have their eyes on Google, and they both feel competitively threatened by Google, and that's going to push them together. And we're going to see a lot of discussion about fast, smooth, native applications from Facebook on the iPhone 5 that we're going to learn all about tomorrow.
So with that in mind, how closely tied are the fates of these companies, and what can they learn from one another?
Yeah, I don't know that they're all that enormously closely tied. I mean, to some extent, I think that Apple gets a short-term advantage from Facebook. Facebook gets an advantage because everybody does in today's market by kind of rubbing up on Apple. I don't think the fates are really intertwined. Facebook could do well even if Apple didn't. Certainly vice versa. I mean, if we look over the last few months, Apple's grown profits more rapidly than Facebook. It's grown revenues much more rapidly. It's a much larger company, so it should have a hard time doing that. So its success has not rubbed off on Facebook. I do think that they are both kind of variously triangulating on Google, and that might drive them yet further together going forward.
All right, Max, do you own either Facebook or Apple shares?
I do not own Facebook or Apple shares.
All right, Max Wolff with us tonight. He's with Greencrest Capital at the NASDAQ. Thanks, Max.